I said, okay, now even though we have a lower low formed here on all three major averages, the NQ, the YM, and the ES, they all agreed on that lower low. There was still SMT divergence there because we're looking at the relationship to the dollar index. The dollar index is going to give you risk on, risk off. If the dollar is going to go up, that means it's risk off. That means Forex, foreign currencies, and index futures are going to have more freedom to drop and have a hard time rallying higher. If the dollar index is moving lower, that's risk on. That means that Forex, foreign currencies, and index futures are going to have a very easy freedom to rally higher. And it's going to be very hard for your sell short positions to be profitable. It just won't pan out well for you. It's important to know that because majority of the traders that I have watched and observed and how they trade and what logic they use, they don't ever talk about this. They don't ever mention it. They might use Dow theory, the relationship between confirmed higher highs, not higher high, higher low market structure. I'm talking about very specific key lows that are forming. We're watching them this morning live. As they dug in and made that lower low, I was walking you through it all. Go back and watch the live stream. You can go on my YouTube channel, click on the live tab, and watch it. I can't edit it. It's all there. And the things I'm telling you and prompting you to look at, even though my chart stayed on this, you should be having another window where you're toggling to another chart when I'm prompting you to do it. Because you have to have intermarket relationships where they have connection. And then when you have intermarket analysis brung from like a dollar index, why are we even referring to dollar? Because risk on, risk off. If there's going to be a change in sentiment, usually the dollar index will start showing it to you. If you see the lows forming, we were already worrying about these lows forming down here early. We felt that they were suspect because I did not see follow through on dollar index. And the dollar index failed to make a higher high, and this is where you need to write in your notes. The dollar failed to make a higher high as we made this lower low at 10:12 a.m. So that lower low on the ES and the lower low in NASDAQ and the lower low on Dow futures was not met with a higher high in dollar. That is an SMT divergence. I call that index SMT divergence. Dollar index SMT divergence, rather. A symmetrical market, and this is for your notes as well, a symmetrical market is where if we have lower low like this, we're not talking about trend, we're talking about very specific relative highs and lows. We have a low and then a lower low. If that lower low is seen in NASDAQ and lower low in the Dow and a higher high in the dollar index, that's a symmetrical market. That's in a perfect world, that's exactly what you want to see. If at any time you see one of those crack in the correlation that I just gave you, it's telling you there's a sentiment shift unfolding. And I walked you through it live this morning. So you have to be able to measure things real time. If you're going to be a day trader and you want to have precision and you want to be trading with an institutional mindset, these are the tools and concepts that they're employing to do it. There's no indicators here. All we're doing is referring to another asset, another instrument, and its price delivery. The reason why this occurs, for some of you that are thinking, well, why does this even work? Because there is a shift in all of these algorithms. The dollar index runs on an algorithm. The ES runs on an algorithm. The Dow runs on an algorithm. The NASDAQ runs on an algorithm. They're all running on an individual, same, but their own individual algorithm. When they're manipulated, that crack is like the signal for, all right, it's time. Now, it's largely goes unnoticed by most of the trading community, because if they all noticed it and they felt it was advantageous to even be paying attention to it, it would be plastered in every book. It would be in every course. Everybody would talk about it on. They're going to do it now because I'm doing it. But when you do these things and you see them, studying them, and you start trading with them, and you've been using them for 3 decades, and know that everybody else doesn't touch on it, it's like a secret weapon. And here's the wonderful thing: it's never going to stop working. So stop worrying about it. Okay. The reason why it's never going to stop working is because the market has to signify it's time for that smart money group to get to work. That's why it's happening. You don't have to believe me. I don't care. Save your opinions because you're not convincing me. I'm out here walking it out here for real in front of you. I'm telling you how it's happening, real time, on a minute by minute basis. And I'm telling you where I'm getting the information from. So that way you can walk forward with it. Not, oh, it was cherry picked. It only worked at one time. No, you're going to see this stuff work all year long.